This is our Forex blog for July 18th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. The first part of our three-step easy Forex trading system is just simply use this currency meter. And I've set this up to be sortable, so you can bring up a quote sheet that is linked to these charts, and then when you resort them, it will put them in the right order from strongest to weakest. The New Zealand, Australian, and yen are the strongest ones over the last hour, the hourly trend up. The weakest ones are the euro, the Swiss, and the dollar. So basically, step one is use a currency meter to find the most trending ones to be buying and selling. You want to buy the strongest currencies when they're on top versus the weakest. Now, the euro is on top of all the other currencies on here and on top of the New Zealand. So if the euro is weak and the New Zealand strong, you're looking to sell the euro New Zealand. You can see the Australian very strong. The yen was strong earlier today on pretty much all time frames. And the histogram format's a real-time trend. Underneath that we have the 15-minute trend, hourly, daily, weekly, monthly. The more time frames that line up, the higher the odds, and also the more chance of catching a bigger win, 30, 40, 50, 80, 100 pips. If the real-time trend's up, the 15 minutes up, but the hourly, daily, weekly is down, and maybe even the monthly, then the chances of catching a 30 to 50 pip win are less, unless it's the beginning of a new trend. Sometimes that happens, but most of the time it doesn't. So you can see the Swiss is weak on all time frames. The yen very strong. I don't leave this one running, so let me just bring up a Swiss yen chart. And you can see, especially earlier today when, the trend is down, wait for a pullback, go short, you have a small profit here, nice 25, 30 pip profit here, small profit here. And this is one of our newer and much faster digital signal processing type moving averages that filters out the noise. It's extremely fast, has very few false whipsaws, and it's a 20 period one, just to give you an idea of what compared to a moving average. This is going to be in the next generation of our software. Exponential moving average is faster than the simple, but you can see this is ridiculously fast, and it gets you into new trends quicker most of the time. And really, that's what most traders are looking to do. It's much better to get into a trade here than here. That's another 8 to 10 pips up. It's another 8 to 10 pips less risk, and vice versa. You can see, got you in this trend here a few pips early, got you out, back in. And a lot of times when the market's going sideways, they tend to converge. When the market's moving fast, it's much faster. And this is going to be something that you'll be able to use as a timing tool as well if you want. If you see a super weak currency versus a strong one, you know that this digital signal processing based, for lack of a better term, it's not really a moving average because it's extremely sophisticated and uses advanced digital processing techniques to filter price data. And the range charts are also faster than time-based charts. As you can see, it did a really good job of finding places to sell. You might have gone into a trade here, out pretty much small loss, in here big win. Obviously you're trading in the direction of the trend, so you don't buy the bottom. So you're looking to sell here, sell here. If you're going to be buying, you don't want to be buying one that's trending down. You want to find a currency that's going up. For instance, the Australian's very strong, and the Swiss was weak. So the Australian Swiss, for example, would be one that you'd be looking for buys in, not trying to pick the low of the previous weak currency. So this is an example of one that's trending up. Notice how it's spending most of its time above the super fast, again, for lack of a better term, moving average. And notice, in here, small loss, in here, 15, 20 pip win, in here. You can also use this for your entry and our trailing stops for your exits. That's a much better method, and that's probably how I'm going to be trading this as well. So you put a 2 times chandelier trailing stop on there, and when it breaks out from below to above this, you get in, and you use the trailing stop to get out. So you'd be in right here, out, and you'd still be in that last trade. That's a much better way because the trailing stop tends to be a little bit wider. You could even, with this technique, have a smaller 1.5 multiplier as well. Again, you're only using this for your exits. So if you got in right here, you lost a small amount in right here, nice profit. You missed a little bit more of this in here, small loss in right here, break even. 1.5 actually is a little bit too fast, except for the explosive one-way only up moves. So again, the three-step system is basically find the strongest currencies, the Australian, against the dollar or the euro. You could sell the euro Australian as well. Let's bring that one up here. And I'm going to change the settings on the trailing stop back to 2. So this is a currency you're looking to sell. You can see it's underneath. Go sideways right here, breaks down, you go short, and it pretty much kept you in there the whole way down. Sometimes when currencies, are this weak, when one's so strong and the other one's so weak, you don't get any kind of pullback. And so really the only low-risk places to get into a trade like this are when it first breaks down to the sideways range right here, or when it first pauses. The first pause, if it goes sideways like this, if it goes underneath here, you can go short. It's a much riskier trade than selling it at or near the beginning of the trend. But some instances you don't have any other choice. So watch if you got it in a risky trade like this, I would exit half here just to, move your stop to break even, and then get out of the other half especially when it hits the 2.0 level. That's almost always the end of the move. So you would make pretty much 12 pips on the first half and maybe 40 on the second half, averaging out to about 25 to 30 pips on that trade. Now, the dollar also became weak later today, and this is one that has mixed trends. You're always safer trading one currency that's strong on all time frames versus one that's weak, like the Swiss or even the euro. But when you see the strength of the dollar kind of decline over time, it didn't do so too much here. Sometimes it's more pronounced. Extreme strength, a little bit of weakness. If it was like this for half an hour and not much strength, it's oftentimes going to reverse back to weakness. You don't know if it's going to be super weak. But at 9:30, that was the most weakness you had for about 5 hours. And the weekly trend's down. The monthly trend's kind of mixed. It was down, shifted just barely up, shifted down again. So the longer-term trend of the dollar is down. So the Australian dollar is a good one to be, looking for buys in after around 9:30. This is one of those currencies that I do leave running overnight, so I'll bring it up on here. You can see this one's just been chopping around here. And then when it broke out from underneath above the hourly. And this is another good one to put our new, and it might be about another week before I release this, our digital signal processing indicator, which is like a moving average. And I'm going to use a 20 period here. And you can see how early it gets you into trends. I mean, it's pretty ridiculous. So anytime you see a currency that the daily trend's up, the weekly trend's up, the monthly trend's up, even if it's kind of chopping around like this, you're usually pretty well off by looking for a little bit of a pullback. Wait for it to go above here. You made a few pips. Wait for a pullback, you're in. And this one, happened to take off. First one you made, maybe 8 to 12 pips. The other one you got in, and if you use our trailing stop, you got out right here at 37. You would have been in this right here on the close at 99. We'll round up to the whole number right here. You made 37 pips on that. So this is a 5 pips per bar chart. If you're putting your stop 1 pip or 2 pips underneath the low, most of the time your risk is less than 10 pips. And so the key to trading is not necessarily have super high winning percentage, which we all like. Where human nature wants to be right. No one wants to be wrong. However, I choose and would rather make money than be right. I've seen traders be 95% winning. They take 1 to 3 pips on their wins, and then they get into a trade that doesn't work and they hold on to it, and it turns from a 10 pip loss to 20 to 50 to 100. One guy with a micro lot, luckily, lost over 1,000 pips by just holding on to a trade. It's just ridiculous, and it's extremely stupid. But again, fear makes people do stupid things. And that's why you should always try to maintain your emotions, stay calm. It's a business. Small losses, big wins. Doesn't matter if you have 2, 3 losing trades in a row. One nice trade like this gets all the losses back. So, and you can start each week trading small lots. If you're doing well, increase your lots throughout the week. And, a lot of times you'll have very good weeks. And on weeks that you don't do well, you'll have very tiny losses because you're trading the tiniest number of lots. Whatever you're trading now, if you wanted to employ that strategy, you could just simply cut your trade size in half. If you normally trade one lot, trade a half a lot to start the week off, work your way up to maybe 0.75 lots, one lot. Wednesday or Thursday do 1.25 lots, maybe even if you're doing super well, up to 2 lots at the end of the week. If you have a really good Friday and a really good week, you might make 3 to 5 times more than you normally would without employing that strategy, and it also keeps your risk low. And every once in a while you're going to have a Friday where you give back some of your nice week's profit, but rarely when I've employed that strategy I've had an extremely good week where Friday I've given it all back. It's almost never happened. If I have one big hit, I tend to just quit, be happy for the week. Somebody who's more of a gambler might not have the patience and discipline to do that. Everyone wants to fight the market to get their money back. It's not your money until the end of the week. So during the week, I don't even consider it my money that I made, only at the end of the week. And then start the next week with smaller number of lots. And if you're doing well, your profitability as the week goes on gets bigger. If you're not doing well, then your losses are always small because, obviously if you have 100% winning or losing trades, you could have a big loss regardless. But a good week could overshadow a week with even 100% losses, as long as your losses are 6, 10 pips. Now, one other thing to point out for new traders, I do Fibonacci analysis each night where I show you the Fibonacci retracement levels in dark gray and Fibonacci retracement levels in light gray. Sometimes they're both at the same level, and these are areas that are very likely to be the maximum high or low of the day, especially at our outer containment bands. I pretty much ignore the red bands, and I'm probably going to remove them from charts in the future. Price goes through these a lot of the time. The white bands, maybe only 20 to 30% of the time does price go through it. And we also have green bands on here, which are 3 standard deviations, which price almost never reverses off of. It almost always reverses off of. It's extremely, probably 90% of the time, if it ever hits one of these green bands, you're going to get a reversal on price. And you can see it never happened this week. The white bands, usually the price stalls and reverses off of those. This particular currency, hasn't hit the white band today yet. Last but not least, you can see the New Zealand got really strong later in the day. The Australian was strong too. If you had your choice, a lot of times these tend to move in the same direction most of the time. If the Australian is strong on all time frames, you're much better off buying the Australian versus the weak dollar. But if you see real-time momentum and you want to trade the New Zealand versus the dollar, you certainly can do that as well. And you can see this one also, went up. I have the counter trend trades on this. And you can turn those off with a new version. If you get the FX trade signals, we released a new version this week which allows you to turn off those. Uncheck show counter trend, and it will only put trend signals on the chart. New traders, you might want to avoid the counter trend signals because it's relatively. I spent pretty much 90% of my time working on the trend signals. You can see right here, that one led to a small move. This one right here led to a nice trade. This one here worked. This one here failed. This one here caught about 25 pips up. And again, when you use this in conjunction with our statistical tools, you'll have a much better odds. Let me just finish today's video by showing the digital signal processing line that we're going to be releasing probably next week sometime. And by the way, I'm so impressed with this. I'm not a big fan of moving averages, and most of our statistical tools do not use a moving average, but this build your own trend, I probably have 2 tools in there that does use moving averages, and it probably gets maybe a 20% weight. These find new trends much faster, and I'm going to create a new tool that uses range charts in this tool because it is such an amazing tool to get you into the new trends early. You can see right here, kept you in, and it kind of touched it and went sideways right here, broke out again. It's just phenomenal. if you see earlier today the trend's down and the price is above here, you can just go short, you lose a little bit, short here, you made 10, 15 pips, short here, pretty much broke even, short here, you made 10 pips. And once it goes up and you see this, it was weak all day. On the up moves, there was no statistical strength until right here. So you probably would avoid this sell trade right here. This sell signal just uses chart patterns. This does not use statistical tools because this is a live only tool and this works on previous and past bars. I wanted to keep it that way. In the future I might create a live only buy and sell signals on your chart that use our statistical tools, and obviously in that instance it would not be looking for a sell here because the market was so strong. You can watch this yourself and say, well, you know, it went down, went to the previous day's low, which is a support area, and it ran out of weakness, and it trended back up. Yeah, I'm not going to take that trade. You also went from below to above the weekly pivot. Above the weekly pivot, it's bullish. Below it, it's bearish. So this is a major support area that, you know, the market found support, wasn't able to bounce off of it, went down here and did. It's very likely to go up because it really wasn't weak enough to break any major levels of support, and therefore, you know, and it had many hours and hours and hours to do so. This is just common sense stuff for traders watching the charts. This signal here is not likely to work. You know, in fact, when it goes sideways like that and breaks out, you want to go long, you could put your stop right underneath this super fast digital signal processing, you know, moving average, and just get out of that trade right here at 75. You're in this trade right here at around 50. Make 25 pips in a counter trend trade, and then get back in it again here and ride it up again.